Got it. Joining us now, Scott Martin, John Layfield, both of them are market watchers. Scott, to you first. The corporate tax rate is not too high. Your response, please.
That is a crazy statement. It's not too high, yet it's the highest in the developed world. So I guess what is high in this case, Senator Warren? You know, it's funny. She talks about the corporations and their share of payments and so forth. But if she actually did her economic homework, Stuart, she would see that job growth, economic growth going forward is all on the small business back. And those are the ones that are paying the high tax rates. That's why the market got so excited when Trump came out with this tax cut plan, because the small businesses in this country, which have been held down so long by the Obama administration, were finally going to get somebody in D.C. that was going to help them out.
All right, John, the corporate tax rate is not too high. Your statement, please.
Well, I agree with Scott, especially about job creation. Over 50% of your jobs are created by small business. And I don't know if Senator Warren is just naive or willfully ignorant to appeal to her populist base, but this is a spurious claim. The corporations are not paying 35%. The big corporations have bought off crooked politicians for decades, and they're paying an effective tax rate somewhere in the low 20s. The people who are paying this is exactly what Scott is talking about, are your small businesses who don't have the political clout. They're the ones getting killed by this highest corporate tax rate, and they deserve a break.
All right, John, our viewers are seeing how the market's likely to open in 2 minutes' time. It will probably open down 50 or 60 points for the Dow Industrials. John Layfield, is that because investors are really worried about getting anything done of the president's growth plan this year?
Unfortunately, yes. Look, the Trump administration has gotten bogged down in so many things that involve things other than the economy. The August break is coming. If they don't get corporate tax rate passed by then, it looks like it will not get passed until 2018. Then you're in a re-election cycle for the senators. It may not be passed at all. You might get something done with the corporate tax rate, but you're not going to get something done with the overall tax reform. The repatriation, that's why the tech stocks are so high right now, is the repatriation is one thing that could probably get done, but not massive corporate tax reform.
Scott Martin, is this the start? I mean, we're down 372 yesterday. We opened lower this morning. Is this the start of a nasty sell-off, do you think?
I don't think it's a nasty sell-off, Stuart. I think it's a sell-off that probably is somewhat long overdue. I think to John Layfield's point there, you know, stocks have been high. Tech stocks have been overpriced to some degree, probably based on that repatriation issue. But I will say, in the words of my favorite rocker, Chris Cornell, when you're looking at the stock market, you know, follow me into the desert as thirsty as you are, because even though things look bad and it's maybe not a place you want to go, eventually stocks are going to be cheap enough, they're going to be attractive.
Scott, I believe that gentleman died today.
He did.
Chris Cornell?
He did. I was a big fan of Soundgarden, Audio Slave, Stuart, in Temple of the Dog, which was the original project that Chris Cornell had, if you can remember. I didn't want to date myself today, too bad, but that's one of my favorite guys of all time in music.
Don't worry, Scott. I'm going to avoid dating myself as well. Believe me, I'm going to steer clear of that one.
You should be allowed to date whoever you want. That's an old joke.
Is that an old joke?
I don't want to date myself.
The Dick Cavett joke.
Then you're dating me by saying it's an old joke. All right. 5 seconds, ladies and gentlemen, and we're off and running on this Thursday morning. Boom. Here we go. We're going to be down. Let's see how far we're going to be down. 25 points in the very early going. Lots of red on the left-hand side. I see a little bit of green at the top of the screen on the left again, and we're down 30. We're down 34. Okay, down 43. Remember, everyone, what happened yesterday was a very significant loss, down 372 points, the best part of 1.8%, biggest sell-off in 8 months. Here we are the next day, opening lower again, but the loss is restricted to about 50 points at this moment in time. But look at that level, 20,500. The high was 21,100. So we're coming down 500-600 points from the high.
But it's 20,568.
Well
That's
said.
still pretty good, wouldn't you say?
Yeah.
And we're only down about a tenth or two right now.
Right. Yesterday was a $300 billion wipeout. That was a painful day yesterday.
It was. I think the market is supported by primarily higher profits.
Yes.
A 13% gain in profits in the first quarter. And that's supporting the market at the moment.
Still a bullish forecast for the year, 8.5% advance for the S&P 500 in profits for the rest of the year.
Well, look, we're off and running. We're down 35, 45 points. That's not a huge loss after yesterday. The S&P is down just 0.14%. Again, not a huge loss. How about the NASDAQ? I've got a suspicion it's not down much, I'm right. It just fell below the 6,000 mark, down 0.2%. 0.20%. Couple of individual stocks. Let's go at them. The retailers, first of all. Walmart reported better sales this morning. Online sales doing particularly well, and Walmart is up a nice 2.5%, 76 on Walmart. How about the fabulous five, the big tech companies? They're the fabulous four at the moment. The odd man out is Microsoft, which is down this morning. I do own some of it. I come back after vacation and look at the things down. All right, down 23 cents, 67. The rest of them are on the upside this day on a relatively down market day. How about the financials? Took a huge hit yesterday. Most of them are recovering a little bit of ground, except for Citi, which is down another 1%. So a mixed bag on the financial picture. The price of gold down 30 cents. The price of oil still around $48 per barrel, right there, 48.61. And the yield on the 10-year Treasury is 2.21%. Let me explain. That is a rush to the safety of the Treasury bond market when the stock market is falling down. 2.21, very low yield on the 10-year Treasury. Look at that square right there. Scott Martin, John Layfield, Ashley Webster, Elizabeth McDonald, all part of the coverage this Thursday morning. I believe that the market is down because investors are skeptical that they'll get tax reform this year. Back to you on that subject, Scott. Is that why this market's down?
Yeah, I mean, this market, Stuart, if you look back to the election on November 8th, was built on hope and promises. And we've all been in relationships that are built on hope and promises. And when you feel like those promises are being taken away or fallen short on, you take a break, you take a step back, and I believe that's what investors are doing. But there is going to be a point at which the market is going to overreact. The investors right now, at least yesterday, as Emet kind of pointed out with the hundreds of points that we lost or the $100 billion in value, investors are shooting first and asking questions later, and so eventually that becomes a buying opportunity because things like Apple yesterday down $5 gets oversold.
Ash?
You know what? This market has been remarkably resilient to all the noise coming out of Washington. I think investors' patience has finally worn out because they're very concerned that all the shenanigans going on is going to push back the economic reform that's needed.
Look at it now. The Dow Industrial is down only 17 points. Liz, may I suggest that it's got something to do with your story this morning?
I think so.
The Koch brothers are shoving in a ton of money to get tax reform. Yeah,
the white knights coming to the rescue. Unlikely white knights. They don't like Donald Trump. They want tax reform by the fall. And I'll tell you something to Ashley's point. The markets went down at 8 months. We haven't seen that 8-month low. Why did it go down September 9th? Rate hike fears. Profits still coming in strong. The fastest pace of operating profits in 6 years in the first quarter.
You're putting a floor under this market.
Yeah, and the Koch brothers story is a big one.
Do you think, John Layfield, do you think the Koch brothers story is a big one? And look, they got $300 or $400 million that they will push into advertising campaigns to get tax reform this year. I think that's a positive factor. What say you?
It is a positive factor because you're going to be able to influence politicians that way to get on board with the Koch brothers to get this tax reform done. Because right now, President Trump doesn't have many friends in Washington, D.C. The media is certainly against him. He's alienated them. But the Republicans and the Democrats both are not working with him. You've got to have somebody help him get this corporate tax reform done. And perhaps this is the impetus that'll get it done.
All right. Thank you, John. Listen to this. Walmart, helped by better foot traffic at Walmart stores and Sam's Club, a rise in online sales. A big rise there, 63% up. As a matter of fact, it was up, 63%. And Walmart is a winner this morning to the tune of 2.5%. Looks like online came through for Walmart, Scott.
Online was awesome, Stuart. And, you know, Walmart remains the largest retailer on the planet, but Amazon is catching up to them. And obviously, that's all via e-retail. So with respect to Walmart's numbers today, seeing that online number be so strong came out of kind of nowhere, frankly, because the online numbers hadn't been great in the past. That's why the stock's been going up.
All right, John, what do you say? Online did it for Walmart.
It did. Look, this is a battle of giants right here. Remember, Walmart was the original retail killer before Amazon. Now these two guys it's like Rockefeller and Carnegie going at each other in the 1900s. You're going to have few survivors out of this as far as the retail sector. But the hiring of Mark Lohr, the Jet.com, this is where Walmart can grow. And Walmart is the one challenge to Amazon because they have distribution centers already all over the country. They could have same-day delivery for groceries, for electronic items right now just by adding some trucks.
It's enough to put it at a 2.5-year high at 77 for Walmart. What do you got?
260 million people around the world visit a Walmart a week. every week. 260 million versus Amazon's 80 million or so subscribers. I mean, you can't beat those numbers. And if they get their internet strategy right, this is popping at 5-year highs, their online growth, they could really outdo Amazon.
What do you say, Scott?
The world may be big enough, believe it or not, guys, especially with the numbers EMAC just talked about, to have both Walmart and Amazon thrive. That's an interesting aspect to look at when you see these two stocks and say, maybe they don't cannibalize each other. Maybe they just dominate together.
That's very interesting. I got news from Target. Their CEO says tens of millions of dollars in consumer spending is up for grabs. I think he said tens of billions, actually.
45 to 60 billion.
Yeah, 45 to 60 billion.
That will be up for grabs because of all the department store closings.
So they all close, leaving fewer outlets, bricks and mortar. So you got $45 billion extra to be spent on those bricks and mortar.
That's the theory.
And Target is up 1%, 55 on Target as of this morning. All right, now we're up. We've turned the Dow around. Now we're up 6 points, 20,612, okay? Down 372 yesterday, up 6 as of this morning. How about the NASDAQ? Has that turned around? It's the home of the technology companies, and yes, it is now up 7 points, back above 6,000. How about the S&P? Let me see it, please. Have we turned that one? Yes, we have. So all the three markets are up as of right now, following huge declines yesterday. Very interesting. A weak forecast from one of the Dow components, Cisco, way down this morning. A weak forecast equals a downside stock move, 7% lower. Alibaba's profits lower than what Wall Street was expecting, and that stock is down 2.5%. Shares of Pandora moving higher. There are reports that Sirius is in talks to buy it. That's good enough for a 6% gain. The shares of teen retailer Buckle moving down. Profits higher, but sales were down. Up 10%. You know, I've been covering this thing for 40 years, and I scratch my head. I seriously do. Okay, moving on. Facebook, that 5 years ago today, they went public for the first time, and the stock is up more than 250% since then. All right, Scott, you're buying it at 145 because it's had a pullback.
It has, and I am. I love Facebook going forward. Now, here's the thing. I'm buying Facebook, Stuart, with the caveat that I'm willing to hold it for a year or two because Facebook is high. But remember the story about Facebook. IPO'd around 40, dropped like a rock into the low 20s, and then rallied up big since because they figured out mobile, and they figured out how to use all the data that you put on Facebook and everything you do on Facebook, use it to their advantage. And finally, my friends, AR and VR, which, Stuart, I know you're not sold on just yet. That is the future of Facebook. They bought Oculus. They're going to use VR as a big point in their plans in the future of the company. I love them.
Look, Scott, if they can stop me getting seasick when I put the goggles on, I'll see what I can do for you.
Just take some Dramamine, you know?
I'm not going to use something and take a drug to help me get through the technology. Are you kidding? John,
I was giving you an excuse. Sorry.
John, would you buy Facebook at 145?
I think you need some virtual Dramamine is what you need. Look, I did not buy Facebook, and that was a stupid decision. I'm looking at Facebook now. Scott's right. The figuring out mobile a few years ago was huge. They're now figuring out broadcast television, specifically live sports. I think that's going to be just as big.
Oh, yeah, yes, it could be. With 1 billion to regular monthly users, I think. We got this story on Google. They're going big on artificial intelligence. What exactly are they doing?
Deep neural network. Why they gave this story to me. This is need a big brain to talk about. That's exactly what this is. Google is developing a big brain up in the cloud that has a processing chip that will allow remarkable things as far as artificial intelligence, robotics, voice recognition, all of these things that if you sign up for this service, you run your business, you can tap into this amazing network that allows access to all of these great features to build your websites, your apps, and just to run your business. They're going to unveil this new chip by the end of the year that will enable you to do things which are very cool.
I see Alphabet at 947, and I see Amazon around 960. One of those two might hit $1,000 per share at some point in the future. If we get back to rally mode, they could well hit $1,000 a share. How about this one? U.S. household debt has topped the record level that it hit back in 2008. Scott, is that a good sign? In any way, can you call that a good sign in the sense that people are borrowing again?
You could find good things to say about it, just like Senator Warren finds bad things to say about the tax code. You know, Here's my take. Household debt levels are a reflection of confidence, and people are willing to take on more debt if they feel like they're going to have the earnings, the growth in the future to pay it back. Secondarily, and I think maybe the bigger story behind this, interest rates, my friends, have been so low for so long you could barely even see them. So taking on additional debt on your balance sheet wasn't as big of a task as it was, say, back in the early 2000s or even mid-2000s. So it's kind of a combination of both things there to me.
I think the increase in the debt level there was also due to student loans, which are now $1.2, $1.3 trillion, enormous. One issue before we go, we have been talking about green shoots in the economy and positive economic signs. The latest round of political turmoil doesn't change some of the good news that we've been seeing on the economy. John Layfield, fairly positive views on the economy coming through. What do you say?
I agree. Like what EMAC was talking about earlier, the highest corporate profits return percentage-wise in 6 years. You also have very low unemployment right now, so you're starting to see some wage pressure. The consumer is 70% plus of GDP, so when you're starting to see some wage pressure, you're going to see consumers start to spend.
What about this? There is a good degree of positive news on the economy. It's not necessarily getting a whole lot better, but it's pretty solid. Would you agree with that?
It's pretty solid. It's about profits. So, you know, the swamp lizards are not going to drown the animal spirits already in place in this economy. I mean, we know that the reform agenda may be stalled out. That's bad. But small business confidence is coming back. We look at the manufacturing surveys out of the Fed. They're coming in pretty strong for factories.
Unemployment claims, to John's point, the lowest since 1988, which in turn should help to raise wages. The housing industry is ticking along very nicely. And just yesterday, industrial production in April shot up. So there are a lot of green shoots, to your point.
What we really need, and I keep saying this, and I know I'm being criticized for it, but we really do need a new tax structure.
Yeah, you can. If you said it every other minute, I wouldn't mind, because we need it. You're absolutely. I agree with you.
And we're with you, Stu, all the way.
It just worries me that now the legislative agenda is so backed up.
Yes.
Obamacare, tax reform, infrastructure. I'm worried that we don't get anything done until next year. And next year's
maybe the Koch brothers will give the Republicans a backbone, right?
But next year's going to be much more difficult with the elections coming up.
True.
Scott, go ahead.
How about D.C., guys, sacrificing the future of our small businesses, of our children to some degree, of the parents that are working at the factories or working in the small business arena, to put on these political theater events and put on everything that they're doing with respect to stopping the events in D.C. from moving forward from a good economic progress standpoint, just for their own backs to get reelected in a year and a half. It's terrible.
Who gets the blame? Democrats, Republicans, or President Trump? Who gets the blame?
All of them.
All of them?
All of them. EMAC's right. They all do, and they got to come together. They got to govern.
All right, John, word from you?
Well, I agree. The debt doubled under President Bush. The debt doubled under President Obama. But under President Obama, debt service only went up $2 billion from 340 to 342 because of lower interest rates. We have put off until now doing things that we should have been doing for years.
All right, John, Scott, thanks very much for joining us. An important day, the day after the big drop. Thanks for joining us, gentlemen. We appreciate it.